Hello, this is your host Todd Lewis, the Praise of Folly podcast. Don't forget to like, share, and subscribe, and follow the notification bell. Don't forget to follow me on Twitter, Telegram, and Facebook, and you can support the channel on Locals, Subscribe Star, and Buy Me a Coffee. Today is episode 24 of Political Commentary, California's Proposed Wealth Tax. Glad to have you back, Florian.
Glad to be here.
So, before I get into this, it's not essential, but I think it would be very helpful for people if they were to, after this, watch episode 13, where Florian and I talk about Mamdani, because I go into a lot of the meta theory about what's going on, which I don't need to go into again. I'll sketch it out, but I won't go into as much detail. So there's the 2026 Billionaire Tax Act, which is a proposed ballot in California. It was filed on October the 22nd of 2025 and amended on November the 26th of 2025. Now, the goal then, it was sponsored by the SEIU United Healthcare Workers West Union. The measure would impose a one-time 5% tax on the net worth of California residents or part-year residents with assets exceeding $1 billion as of January the 1st, 2026. Net worth would be valued as of December the 31st, 2026, and the tax could be paid in full in 2027 or spread over 5 years with an additional deferral charge. Now, who is affected and what is the intended impact? Target group, approximately 200 Californians with a combined wealth of over $2 trillion. This includes high-profile billionaires like Sergey Brin, Peter Thiel, and NVIDIA CEO Jensen Huang, some of whom have already relocated or are planning to reduce their net worth below the threshold through asset measures. Revenue projection. Expected to generate around $100 billion over 5 years or $20 billion annually from 2027 to 2031, primarily from these individuals. Broader efforts. The tax is tied to residency as of January the 1st, 2026, giving limited time for relocation. Reports indicate at least 6 billionaires have already left the state, with more considering it, potentially exacerbating California's population outflow. Wealth advisors are preparing strategies to exempt assets or drop below the $1 billion mark. Now, here's the thing here. We know, broadly speaking, how right-wing and left-wing pundits are going to handle this. Right? The left is going to say the rich need to pay their fair share, and so these minorities and working-class people can get what they need in social services. And the right-wing media is going to say this is communism, this is socialism, this is anti-capitalism, blah, 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 blah. Well, as I got into my Mamdani video, that's complete rot. Both of these are complete rot narratives. The reality is, this is triage. Okay, so let's briefly recast the point that I made in the Mamdani video. We have two types of capital, right-wing capital. So the people like Thiel and Musk, they don't like this. They want to have AI replace people and robots. And then you got like the left-wing of capital, I guess like Soros, right? And he's okay with that because these guys understand that the point of failure is the worker's ability to provide for his basic needs: home, food, transportation, and if they have children, childcare, right? So let's reiterate it. Okay, California is a perfect example of this. They're an immigration haven. Okay, supply and demand. The supply of labor goes up, price goes down. Okay, so that means you can afford to pay people less, but they still need food, clothes, shelter, childcare, transportation. Well, okay, if they aren't being paid enough money to do that, then let them eat cake isn't really a solution. So then the solution is, well, we're gonna tax some of these billionaires. Now, on the one hand, who benefits the most from this? Said billionaires. So in a sense, it kind of makes sense that they should pay for a little bit of it. But at the end of the day, none of this solves anything. At the end of the day, this is still just triage. It's a token measure to make it look like the left in America is doing something for the working class, which if it were, it would be working with ICE to help secure the border, which it's not. So clearly this is all it's all kayfabe, it's all triage. What it really is the left wing of capital is trying to put a token tax on a few billionaires in order to get them to add a little bit more time to the clock of the labor crisis that is brewing in these cities. Florian.
Yeah, reminds me a little bit of the situation during the Civil War in the 19th century, it can't really remind me of that situation because I wasn't alive back then. But from historical accounts, right, the North was already automating, and so the slavery model was a model that would slowly fade out anyway. And you can make the argument that then you have indentured servitude according to the North model, but leaving that outside, you can also say that replacing manual labor and human labor with robots and AI is a little bit like what the North did, what the Union and Associated States did during the Civil War, or what they basically proposed economically. And so, in a way, you can also make the point that probably the having more humans, like basically indentured servants, that pluck the strawberries on the field, is actually a little bit like slavery, and basically maybe it would be good to replace those jobs with machines, or to pay them more, that you have Americans doing those jobs again, right? So in that case, I agree with you, Todd, that the left wing should work with ICE, but they don't, because I don't actually know what their principles is. Like, they are caught by a wokist class, but that actually doesn't do them very very good on the long run economically. Now, what you said about wealth advisors already scrambling to provide advice to billionaires and to high net worth individuals, um, that's true. And there's also something else that we can look at. It basically also explains how the global financial class may profit from wealth taxes like that. For example, um, like when you have a world where a small number of giant financial institutions mediate most capital flows, right? They mediate their flows, they enable it. And so if you have a situation like wealth taxes, then you get all kinds of like complex vehicles that the rich people want to involve, that they have to pay less taxes, and you basically you basically mediate the cash flows globally, right? And that's a little bit what wealth advisors will now do in California if the wealth tax comes to pass. And that you can also explain that one way in which global financial capital, people like Larry Fink, do have the upper hand is because they register a larger demand of their services, right? So now they can enable capital flows and transactional, cross boundary transaction, something like that, right? So that's what this reminded me of. Like, when taxes is not just the government profiting, it's also like the financial class and their advisors profiting. So it's not. There's probably proponents and both. There are probably also proponents among right wingers, right? If you are someone who uses AI to automate asset flows, uses AI to do taxes, something like that, you may actually be happy about this proposed wealth tax because that's additional demand for your services.
Right. Now, if given what I just said about how right and left wing reporting gets the fundamental issue wrong, I will say it is worth getting into because there are some arguments I think that need to be addressed for and against. So the supporters, backed by the unions like SEIU, UHW, and figures such as Bernie Sanders, who campaigned for it, emphasizing equity and addressing federal funding shortfalls, presumably for social services, which is the point that we got into with Mamdani. Recent polling shows about 48% voter support. Opponents, the Democratic Governor Gavin Newsom, has criticized it as potentially harmful to state finances and competitiveness, warning it could drive away talent and capital. Billionaires, including Bren, have formed PACs like Building a Better California and backing counter initiatives such as Retirement and Personal Savings Protection Act of 2026 to block the tax by prohibiting taxation on requirement holdings or retroactive taxes. Okay, so that's a service. Now let's get a little bit deeper here. Left-wing media generally portrays the 2026 billionaire tax as justified and necessary measures to address economic inequality, funding essential public services like healthcare, education, and food assistance, and counteract federal cuts under the Trump administration. Let's see, supporters such as SEIU, United Health Care Workers West, Bernie Sanders, and Ro Khanna And labor unions are depicted as champions of the working class fighting for democracy and social programs against oligarchic power. Okay, let's stop here. First of all, that's a joke. Okay, stop the immigrants coming in. That's how you help labor. That is a joke. But the not joke part is they're right. If the cost of labor keeps going down, people will not be able to afford basic necessities, which they need to stay alive to work. And this gets back to the point that I made earlier. This is not a sustainable system. The system keeps eating itself, which is why so many of these people hope that AI and robotics can solve the problem, because you just have to worry about the workers anymore. But we're not there yet. We're not, and whether we get there or not, there's two barriers here, right? One is an ontological barrier. Is it possible to develop a level of material conditions such that AI, LLM tools, and robotics can cover all this? That's an unknown question. Second question is, can this system stick together long enough to get to that point? That's also an unknown question, but I think it's a lot less certain than the other one because it's starting to creak. I look at the right-wing pundits. Well, actually, no. We'll stay with the left. Florian, what are your thoughts?
I think that's if you followed X or other social media platforms where people discuss the new AI inventions they have made, the new software platform like Claude and others, and people basically have several promotional posts that make it seem as if you just push a button and then the app looks. If you have a business, you just install Claude on your system and you push a button and all of a sudden the entire AI just goes to your computer and then just like downloads your competitor's ads and then designs your ads like the competitor. Then all of a sudden, boom, your revenue increases, right? So that sounds very appealing. And so of course it's not like you push a button you get rich, but this is how it often appears, right? You get talking about money is also, especially if you talk about proposed cash flows that go to you, that's a very emotional topic, right? So you're very euphoric about this, and in a way you don't really think it through what it really means. So these things are amazing tools. AI is a great tool, but people get a little bit carried away and they think AI can solve everything. Is not the case, right? AI can be amazing help in solving a problem, but you have to already know how to sort of solve the problem, and then it can make a solution more efficient. On a spiritual level, it's something that I heard Owen Benjamin saying once, and that's pretty astute. He said that the big disease or the big illness of modern society is that people expect something getting done for them for nothing. And according to the Bible, that's not possible. And if you think also in other religions, probably it's not possible to get just something for not doing anything, right? Get rich quick schemes are that example. But in a way, society operates on this get something now for 10 to 20 years already. And so this also plays a role in here when you try to improve all these things or try to solve the problem with the use of AI. And that's also a danger. On the long run, that's a spiritual danger, because even if we let AI solve everything, AI can only go based on the topics you've fed it, of course. And then in the end, if you look at how AI does text, for example, like 2 years ago when ChatGPT came onto the scene, it was amazing. It could create like real legible text, like all of a sudden, like that, 5 seconds the text was there. And as I've seen lately and others, is that you can use ChatGPT to create an app like that. So you can create certainly there are people of the government, of like the capital class or whoever, like wealthy people and whatnot, and they will design AI to solve the system. But the problem is that over the long run, after 2 years, we can now see which text was done by AI, right? So any solution, because it becomes like it kind of circles around an average. And with the systems and software, it will be the same way. So if we try to use AI to solve our societal problems, we'll get at best very mediocre solutions. At worst, we get solutions that are spiritually harmful on the long run. And maybe as some form of side note, this is also important to keep in mind.
Yes. Okay. Now, some of the Overview of right-wing reporting. Right-leaning media outlets overwhelmingly oppose the proposal, framing it as an assault on capitalism, innovation, and economic freedom that could devastate California's economy by driving away billionaires, jobs, and investment. Let's see. Coverage stresses voter awareness of risks with surveys showing around 60%, but also admissions that it would spark business exodus, 52%, and job losses. Supporters, including senators, unions, and progressives like Hawar or Swisher, are depicted as greedy socialists, pushing in un-American policies rooted in envy with hypocrisy, noting Sanders' private jet use. Opponents such as billionaires Thiel, Page, Brand, Elon Musk, and Newsom are shown as victims of overreach, with reports of reallocation to low-tax states like Florida and Texas, and warnings from figures like Kevin O'Leary of economic suicide. National Review criticizes the tax's use for sloppy Medicaid eligibility, arguing it ignores fraud and won't solve structural issues. Okay, I will give National Review this. It will not solve structural issues, but neither will National Review's recommendations either. So there's a few things to break down about this. It's just, ultimately risible. While it is true that increasing taxes will put pressure on businesses, so some will leave, I don't think that's why people are leaving California, though, right? A lot of the exodus to like Texas and other Western states is due to the crime and the impossible living conditions because of all these immigrants, right? But you can't say that because we're a nation of immigrants, right? So you have to come up with some other reason why so many people are leaving, and that's really much of it. Plus, let's not forget the draconian COVID policies of California had a lot of people leave. So we want to be careful, like who's leaving for what reasons, right? We've got to be clear about that. But then, second of all, this is still a problem that the right-wing outlets aren't going to be able to answer. If you pay the workers so low that they can't afford food, transportation, housing, and clothes, and childcare, how are they going to work? Well, they're not. They'll leave. I mean, that's the other problem. Yeah, the jobs might leave, but then if you don't give the workers this, they might leave. So it's a catch-22. That's why the system isn't sustainable and why it's not working. Fraud is real. Think about what happened in Minneapolis with the Somali daycares. So that is a legitimate concern. We'll give the right-wing media that. That's a legitimate concern. And, I'll get to this a bit later. The idea that billionaires are a victim of overreach is laughable, but I'll hand it to you first, Florian.
Yeah, I always hear the argument. It's pervasive, the argument. Like I hear people not just in the financial background talking about that financial context, and that is always if labor is more expensive, then life will be more expensive for everyone. Yeah, sure. I mean, if you get more money, you can afford a higher price, and in the end, you have an economic equilibrium that will recalibrate. Very simple, right? Why, if you get $1,000 per month, or like you get like per year, let maybe say people get like $40,000 per year. Now, thanks to inflation, people get things are more expensive, and people have things are actually twice as expensive, and people are getting 10% more wage or something like that, right? So it went from 40,000 to 60,000. It's actually 50% more. But it always feels like your salary doesn't keep track with the real world inflation of products. But this is also an example where one equilibrium changed in a different equilibrium. So if we make things more expensive because we give people more money, then they will also be more. The demand doesn't necessarily need to go down, especially not when the products are inelastic. Inelastic means a product that people will always buy no matter how much it costs, right? So like basic necessities, bread, butter, water, eggs, those are basically very inelastic goods, and there will just be a new equilibrium. If you pay people more, then these things will get more expensive, but there will be a new equilibrium. You can afford more if you get paid more. But also the second point is that many of these things are actually just not so much a direct result of an enemy cabal implementing all those rules. They're like patchwork. I would like to also point out the Netherlands have an unrealized capital gains tax on the books now that's probably going through. But the thing with that is that in the Netherlands there was a court ruling based on the European Supreme Court that basically said that the Dutch government has taken too much money, or has taxed people too high, right? So what happened in the Netherlands? People were taxed on their income from stocks and from other assets that appreciate in value. They would always be taxed on like an assumed interest of 4%. And that's a so-called Box 3 law. It's the income tax system for savings and investment. And the Dutch government used the deemed return of 4% rather than the real return as tax base, right? That means when people now had very low returns, they started to revolt against that and sued. And so the Dutch Supreme Court, they said this approach with assumed returns violates right protections, and they basically have to pay back billions of money uh, on people because they basically overpay taxes. So now the Dutch government has a budget shortfall, similar to a problem that California faces, probably budget shortfalls. What do? Well, you now transition to a regime that taxes everything on a real return base, but you also include in that now not just interest, but also um, unrealized gains. So basically, you tax interest received, dividends received, rental income, and changes in market value, including unrealized gains for certain assets. Right. So that is what this law was. What the That's what the reporting about the Dutch tax on unrealized gains is about. They basically also tax changes in market value, unrealized gains. That means if you hold stock from, I don't know, Amazon stock, and I don't know the stock price by heart, but let's just assume it's $100, and now Amazon stocks appreciate in 1 year by $20. So, but you still hold your stocks there. You're basically not, you don't cash them in, right? But you have to pay now extra tax on the $20 that your stock made extra. And that means that will force people to sell some of their stocks. So and then there can be a contagion effect where more and more people sell their stocks, because once you sell stocks, the overall value of the stock goes down. So more people have to sell stocks, and so on and so forth. And that's really harmful on the financial markets. But an unrealized gains tax, that as the Dutch had, that is also just now patchwork. They have a budget hole and they need to plug it. So once again, you're not going at the basics of the economy. You're going at some half-breed measure, maybe that you can guarantee you a more income, more tax revenue on the short run. Also, but I think in general, a wealth tax, I thought to myself that might happen anyway in 20 to 30 years ago. I thought with all the rhetoric, and that was in Germany back then, with all the rhetoric that you have in terms of the rich must pay their fair share and so on, I thought it's only a matter of time before they'd say, look, you have those additional €100,000 on your account. You got to give us some of that to help the less fortunate, right? We implement a wealth tax. That was I'm not surprised that it's coming, but how it is coming right now is not solid economy, I think. And you can make a point that a wealth tax in and of itself is not economically solid, but the way these taxes are implemented looks very, at best, pragmatic, but I would say it's very amateurish, and it ignores unforeseen long-term consequences, because the responsible politicians, they are either the bureaucrats, they are in power forever, or they just have to hold on to power for the next 2 to 4 years because of term limits, something like that, right? So, and that's a larger problem with politics, but it's basically the way these taxes are implemented is kicking the can further down the road, and it's probably not helping anyone. Just plugs a hole in the budget right now. There's going to be a next hole in the budget, which, as a few years down the line, which also is one of the concern of the people against the California wealth tax, because it's not just like, okay, now we take 5%. If you have too much wealth, then in 5 years we'll say everyone who just has more than $1 million pays 5%, and then it's anyone who has more than 100,000, more than 10,000, and so on and so forth, right? It's kind of a slippery slope. That's what people fear, because government has shown itself to be not only incompetent, but looking at like short-term solutions that, as I said, kicks the can down the road. And if you are if you're an individual and you plan for your retirement, you very much look at the can that has been kicked down the road.
Right. So I do want to also deal with this rhetorical aspect of the right that, quote, these billionaires are victims of overreach, which is laughable. So let's do a breakdown here. How do corporations like these work? How do you generate all these profits? First of all, you outsource the costs. Now, how do you do that? Well, one way is you have the police protect your private property. If you had to pay for that out of pocket, that would create a very different business dynamic than just offloading it to the taxpayer because the taxpayer pays for the police. If the taxpayer pays for the police and the police protects your property, I think the taxpayer has a right to have a cut of that because he's paying for your protection. Second of all, they externalize the costs by importing immigrants so that the rest of the country has to put up with this nonsense. Okay, none of us voted for this, right? Going back to George W. Bush's first term, there was a lot of pushback from conservative Americans against the immigration crisis. But, Bush did nothing. Right? He didn't do anything at all. And so, again, the rest of the heartland, America, has to bear the cost of outsourcing this, which, of course, increases their revenues because they get to pay workers less, which means they get to pocket more for themselves. And then let's go back to how corporations are created in the first place, right? It's a government-granted privilege that you are allowed to be an immortal person with rights that you and I don't have. And they can do things that you and I don't have. If I could do those things and you could do those things, we could be billionaires too, right? But we can't because we don't have those rights. We're not immortal legal persons who aren't liable for what we do. I mean, that would be, wow, that would be a clutch, right? You're not liable for anything you do. Corporation isn't. So the government is the reason why these institutions exist and why the men that run them have this kind of money. You take the government away and they don't exist. How do we know this? Well, look at the Scythian steppe. There were no corporations in 6th century Scythia. Why? Because the state wasn't propping one up. So then the question is, okay, given that the state, which is funded by the taxpayer, does all of this for them, there is some justification in saying the taxpayer should get something back for this because we're forced to eat all of these sandwiches so that they can be billionaires. And again, some billionaires actually support this tax. The problem is, though, who's going to be the main beneficiary of this tax? Well, it's going to be the immigrants in California. It's not even going to be heartland Americans necessarily because these are the ones that keep bringing in to work these low-skilled jobs. So, because again, if you're paid better in like the upper echelons of the tech industry, you don't have to worry about this because you're doing great, right? You're doing great. And so this is just kind of highlighting just how dysfunctional the whole system is. The solutions that the right proposes and the solutions that the left proposes are not solutions that are actually going to solve this problem. And in fact, will probably exacerbate it. And okay, Florian.
Yeah, I think that I by and large agree with that. Billionaires are already protected by taxes in terms of they pay taxes, or taxes are paid to also protect billionaires by police and other infrastructure. I do think, though, I could say in favor of billionaires that they probably have their own private protection that will do a better job than any police force. But also other things that if you have a corporation, you can basically take away private liability, which basically corporations you don't need to have 100 million revenue per year to have a corporation. Anyone who is even a plumber, if I was a plumber, I would form a corporation because that means the corporation is liable for damage. Like, let's say I go to some house and I repair the piping, and then I leave a hammer laying around, and then a little kid takes a hammer and destroys something, or maybe hurts themselves, which that happens. And then I, as a plumber, don't only be having to pay like lifelong rent to someone who has been hurt by my hammer. So that's legal protection. I would declare myself as a corporation. So that's actually a good thing that you can declare yourself a corporation. And if you have an independent business, that is actually the way to go, even if your business is just like one person. However, billionaires do profit and large corporations do profit from the government in terms of lobbying, right? So the government enables them to basically get big. The government gives protections. I'm also assuming that when you have, let's say, yeah, you may violate some rules in society. No problem. You have your government lobbyists in place, and that basically may actually feather off the impact on you. But if there's a small business and they violate some rule against the FDA or something like that, there was a scandal. Some of the I think it was Amish people that wanted to sell milk that was non-pasteurized, something like that. Amos was his name. As a family name or first name. He was an Amish person, and the government came down on him hard because he wasn't taking those some safety rules into account and whatnot. Made a huge case out of it, and I know at least one other entrepreneur who was selling baby food with European formula that was approved in Europe. He was trying to sell it here and didn't declare it with the FDA, and the government came down on him hard. If you have a big corporation, that doesn't happen to you, right? In that way, the government protects you from your competitors, and so that's the way that billionaires or government corporations basically, basically have the government help. From that position, it's moral, and it's moral that you should pay some more taxes for that. But on the other hand, corporations also say, we're providing employment, right? So we are not just taking. In which case, I would also recommend that you don't hire H-1Bs for your middle management position. And also one loophole that could be more or less easily plugged, but it's never done, because if you're a billionaire, you just borrow against your assets. Let's say you have an art collection. You put some part from your $1 million art collection up as collateral with the bank and get a credit line. And since it's credit income and not real income, you don't pay any taxes on it. So you have to have some source of income that covers your interest, but the interest is still better than paying taxes. I mean, you have good standing with the bank. You have a $2 million Van Gogh. You open a credit line. The Van Gogh is collateral, and you pay 5% interest on that. Perfect. That's still less than income tax, right? That's one way in which billionaires don't pay any taxes. And those loopholes are interestingly never plugged. Why? Because maybe there's some lobbying involved, and maybe some of the government people also have become very rich, and they know how they have to formulate the tax so that it doesn't hit them, right? And that's another concern about these wealth taxes, that it goes down to the people. It basically cascades down to the people that don't have the money anymore to pay for an expensive legal department, and so then they actually have to pay the 5% on their wealth. Not the big guys. They are somehow protected with lawyers, but the smaller ones, they can't afford it.
Well, what it sounds like is what you're describing is this is just doing nothing while looking like you're doing something. Because if you want to do something, you close the loopholes, right? But they're not doing that. They're doing something that's essentially meaningless that looks like they're doing something. But I actually think we've covered the topic. Is there anything else you want to add?
No, I think we covered the topic pretty extensively. I think in a way, the you would think that if you look at global finance and you envision there's like a unipolar global ruling class, as Keith said, with Larry Fink and other people like him at the top. And so basically you would think, well, wealth taxes, they don't really make much sense for a global finance capital. So why don't they prevent the government from doing that? Well, maybe it's not so bad for them, right? As I said, then because you need a lot of these global wealth taxes create a lot of demand for banks, right? Because they manage all the cash flows, and so they also provide liquidity. If you tax unrealized gains, or if you tax asset wealth, you get people in problem with liquidity. And so as a bank, you could provide liquidity, as I just outlined with this buy, borrow, die scheme, right? Where basically you get liquidity on the base of your artwork. You may not even be able to sell your artwork ever, but doesn't matter because somebody gives you a loan based on that as collateral. and done, right? So that's how the global financial ruling class, if you think there is something like that, if you want to look from that paradigm at it, that's how that class would also profit from these wealth taxes.
Well, yeah. So I'll just wrap up by saying that this is doing nothing, looking like you're doing something. Thanks again, Florian. This is Todd Lewis, the Praise of Fly podcast, signing off.